The chart doesn't show what's actually happening. Let's start with the obvious. Hbar is trading at just over 10 cents. The price has been moving sideways for weeks. If you're looking at the chart right now, it feels stagnant, heavy, slow, no momentum, no excitement, just sideways grinding that tests the patience of short-term speculators. And if your entire investment framework is based on reading candles, this is boring. There's nothing here that creates FOMO, nothing that generates upside urgency. The chart tells you, wait or move on. But here's what the chart absolutely cannot show you. The money flowing through Hbar-linked ETFs from traditional markets, the enterprise pilots scaling across banking institutions, the adoption discussions happening in boardrooms instead of Discord channels, the infrastructure being built beneath the surface. And that's exactly when opportunities form, when the chart is boring but fundamentals are accelerating, when price action doesn't reflect the execution happening underneath. Hbar-linked ETFs are receiving continuous inflows. This is traditional capital coming from fund managers, hedge funds, and institutional investors who, honestly, don't care about weekly candles. They're really looking at multi-year positioning. They're buying at, boring prices because they understand something the chart just doesn't communicate. This is infrastructure being built for enterprise adoption. Most blockchain projects publish roadmaps that are basically fiction. They announce features that either never ship or ship years late. The roadmap ends up as a marketing document instead of a development schedule. Hedera's roadmap is different. The mainnet upgrades they've been executing are actually improving network communication and finality. Network finality is a technical term that matters enormously for institutions. It's the certainty that a transaction won't be reversed. It's the reliability that your system won't experience rollback chaos. For retail users, finality doesn't matter that much, but for banks, for insurance companies, for enterprises running critical business logic, finality is make-or-break infrastructure, and Hedera has been quietly upgrading exactly this. Here's where Hedera's strategic positioning becomes genuinely interesting. The AI Studio initiative positions Hedera as the infrastructure layer for verifiable and auditable AI systems. This isn't Hedera trying to be an AI project, it's Hedera enabling AI transparency and verification on-chain. That distinction matters enormously. Think about institutional AI deployment right now. Companies want auditability. They want to verify that AI systems are operating correctly. They want immutable records of AI decisions. That's where on-chain infrastructure becomes critical. Hedera's partnerships with NVIDIA and Accenture signal that this isn't theoretical. These are enterprise-grade technology companies deciding to build AI verification infrastructure on Hedera. If that adoption continues, if even a small percentage of enterprise AI activity moves on-chain for verification purposes, Hbar demand starts increasing systematically, not explosively, systematically. That's the key word that separates sustainable adoption from speculative hype. Gaming is another adoption vector that's completely underestimated. Hedera has been building partnerships with Southeast Asian telecom providers targeting millions of mobile users. Think about what that means. Direct access to massive user bases, simple onboarding, transaction infrastructure that actually works for micropayments. Most blockchain projects talk about gaming adoption, but Hedera is actually building it through partnerships with companies that already have customer relationships and infrastructure. That's real execution, not just marketing announcements. If gaming adoption really scales through these telecom partnerships, transaction volume grows without needing speculative traders to care. Real people using real applications, well, they generate real demand. Banks and central institutions are running pilots on Hedera infrastructure. These projects, they move slowly, they take years, and they involve compliance discussions and technical integration challenges. They're not exactly exciting news cycles. But when they succeed, when a major bank actually starts using Hedera for critical financial operations, that brings repeat usage and credibility that money just can't buy. And that really compounds over time. Alright. If this breakdown of Hedera's enterprise adoption roadmap just changed how you think about which blockchain projects are actually positioning for institutional value, you need to understand the deeper mechanics of how adoption compounds over 24 to 36-month timelines. Most creators talk about weekly price predictions and technical bounces, but there's an entire category of long-term positioning plays where boring price action combined with accelerating adoption creates exponential value. If this analysis of network finality, AI infrastructure, gaming partnerships, and enterprise pilots helped you see why institutional adoption matters more than hype cycles, smash that like button right now. It tells YouTube this deep positioning analysis matters, and it helps us push this kind of multi-year infrastructure analysis to more people who actually want to understand which projects will dominate when adoption becomes undeniable. And, if you haven't subscribed yet, hit that subscribe button and turn on notifications. When enterprise blockchain adoption reaches inflection points, we analyze what that means for positioning. We break down roadmap execution versus promises in ways most channels won't touch. Let's keep going. Let's talk about scenarios for 2027. These aren't predictions. They're scenario-based valuations grounded in current roadmap execution and adoption progress. Conservative scenario. Hedera continues growing, but the broader market remains selective about enterprise blockchain adoption. Competition increases, progress slows but doesn't stop. In this scenario, Hbar could regain its previous trading range of 30 to 40 cents. If Hbar hits 35 cents, your $5,000 position becomes $16,200. That's a 3.2 times return over 2 years. Not explosive, but substantial. Strong scenario. Enterprise adoption accelerates, AI infrastructure pilots show real value, gaming partnerships drive consistent transaction volume, banking institutions begin deploying Hedera for settlement operations, Hbar reclaims its position as serious infrastructure. Price moves to 75 cents. Your $5,000 position becomes $34,800. That's 6.96 times. Meaningful wealth generation. The kind of returns that actually change financial trajectories. So, let's imagine an optimistic scenario. Hedera, takes the clear leadership position in enterprise tokenization, AI verification, and gaming infrastructure. Multiple banks start deploying Hedera for their critical operations. AI adoption really accelerates. Gaming adoption in Southeast Asia scales up to millions of users. Hbar moves to, say, $1.20 to $1.50. At $1.20, your position is worth $55,600. At $1.50, it's worth $69,500. That's a 13.9 times return. We're talking about life-changing capital generation here. But here's what's important about these scenarios. None of them assume explosive price movement. They actually assume gradual adoption and infrastructure scaling. That's pretty different from most retail projections, which honestly tend to assume dramatic price discovery. This is, honestly, the critical insight that separates serious long-term investors from speculators. Hbar right now isn't a fast-moving trade. It's a slow build that's tied to institutions, infrastructure adoption, and real usage development. That means timing your entry matters infinitely less than just having patience and holding. If you invest $5,000 right now at about 10.78 cents, you're not trying to exit in 6 months. You're positioning for 24 to 36 months of adoption compounding. You're betting that enterprise infrastructure matters way more than short-term price momentum. That mindset shift is everything. Because the moment you stop caring about weekly candles, you start seeing adoption signals that honestly, most traders completely miss. Most successful long-term positions in crypto, they follow this pattern-boring chart, escalating adoption, and then, eventual price discovery. Bitcoin followed it, Ethereum followed it, Solana followed it. Projects that built infrastructure that actually matters to institutions ended up worth significantly more than projects that just chased hype. Hedera is following that same pattern right now. Boring chart, boring weekly action, fundamentals accelerating quietly, institutions accumulating through ETFs, enterprise pilots expanding. That's the setup that, historically, precedes major revaluation. Here's what happens if, even in the strong scenario, Hbar reaches 75 cents, a $5,000 position becomes $34,800. That's not life-changing money for most people, but it's significant. And if the optimistic scenario hits, $69,500. That's genuinely transformational for someone starting from 5,000. But that only works if you can tolerate boring sideways price action while adoption scales. That only works if you understand that network finality improvements don't create price spikes, but they do create infrastructure reliability that institutions actually value. Alright, so here's what I want you to walk away with. Hedera's current price action isn't really reflecting its adoption progress. That's not a bug in the market, that's actually an opportunity. The chart, yeah, it shows sideways boring movement, but the fundamentals, they show enterprise pilots scaling up, AI infrastructure expanding, gaming adoption accelerating through telecom partnerships, and banking institutions running pilot programs. That gap between the chart and the fundamentals is exactly where value gets created. Whether Hbar reaches the conservative scenario of 35 cents, the strong scenario of 75 cents, or the optimistic scenario of $1.20 to $1.50 really depends entirely on whether enterprise adoption actually executes as planned. That's uncertain. Adoption always is uncertain. But, the roadmap is documented, the partnerships are real, the pilot programs are operational, the ETF inflows are measurable, the infrastructure upgrades are shipping. That's all concrete, observable progress. Investors willing to sit through boring sideways price action and trust that enterprise infrastructure eventually gets valued correctly. Hbar at these levels is worth serious consideration. $5,000 in Hedera today could genuinely become $69,500 by 2027 if adoption continues scaling as planned. But that only works with patience. That only works with acceptance that boring infrastructure compounds more reliably than exciting narratives. Thanks for watching TJ Crypto World. If this breakdown of Hedera's enterprise adoption roadmap and realistic 2027 scenarios helped you understand the difference between boring charts and accelerating fundamentals, please drop a comment below. What's your thesis on enterprise blockchain adoption timelines? And before you leave, check out our latest video on how institutional adoption actually reshapes blockchain valuations. I break down the exact mechanisms that separate projects with real enterprise traction from projects that are just casino tokens. The link is pinned in the comments. Stay analytical, stay patient, and I'll see you in the next one. Peace.